Hi, folks. This is Daniela Cambone, and welcome back to StansberryInvestor.com. Before we start today's segment, though, I want to just share with you a report that Stansberry Research has put out that I highly recommend you check out. With most investors going about life investing and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone, it's particularly a good read at this moment in time. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now, a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends you take immediately. You simply have to go to www.wakeupcall2021.com to get a free copy of this report. Again, it's www.wakeupcall2021.com. Get your free report today. It's a great read. All right, that said, it looks like Thanksgiving 2021 could be shaping up to be the most expensive holiday to ever take place. Joining me today to talk about the inflationary pressures at play is Doug Casey. He is the founder of Casey Research, international man. He's a best-selling author, and in my books, one of the few voices of reason out there. And that's why I wanted to hear his thoughts on this today. Doug, always good to see you. Welcome back to the show.
Thanks. Likewise, Daniela.
So just to put things into context, it seems there's no end in sight for the higher prices. U.S. consumer price inflation surged higher again in October. Over the past 12 months, prices climbed 6.2%. It's the biggest increase since November of 1990. So like I said at the start, this could be a very expensive Thanksgiving season. What's your take on the inflationary situation right now, Doug?
It's going to get much worse. Now, I've been predicting this, as have a number of other people that understand economics for some time. It's not transitory. All of these central banks, it's not just the Fed, but all of them are printing up currency units by the trillions. And as they go into society, they bid for things. Mostly they've been bidding for financial assets, stocks and bonds and real estate. But there's plenty left over to bid for the things that you eat and drive and so forth. It's going to get much worse. Now, much worse, because don't forget, I believe that we've entered upon something that I call the Greater Depression. It's going to be like what happened from 1929 to 1946, but much worse and much different and much longer lasting. But I have some good news for you. This Thanksgiving may be expensive, but you're not going to be grubbing for roots and berries quite yet anyway.
All right. Well, yeah, not quite yet. But what's interesting is that we probably haven't spoken this much about inflation and how frightening it is since the 1970s. So were there lessons from that period that we should be applying today?
Yeah. Look, dollars are a hot potato, and that's a real problem because the whole world runs on dollars. Americans save dollars. That's how you get ahead, by saving dollars. But the value of the dollar is being actively destroyed. Inflation is not something, just to make sure we're all on the same page out there, it's not the fault of the butcher, the baker, or the gasoline maker. It's the fault of central banks and governments. They control the number of dollars. So we're in for big trouble because all these governments are bankrupt. Taxes are high and going higher, but they're spending so much that the only way they can get more money is by printing it.
Right,
So
right.
that's what's happening. It's going to accelerate. There's no way out from these people's point of view.
So, okay, to that point, when we talk about a taper is near and they're going to start tightening again, you don't agree? They can't do it?
Look, if they stop printing money at this point in a debt-heavy world that we're in today, debts can barely be paid with these artificially low interest rates, close to zero. So if they stop printing money, the whole financial structure could collapse. That's what happened in 1929, more or less. We had a deflationary depression where lots of dollars were wiped out and prices went down. They don't want that to happen this time. So they're going to keep printing up money. They think it stimulates the economy. They really think that. They really believe it.
Let me ask you this, Doug. When you say things are going to get much worse, we hear a lot of terminology being thrown around when we talk about inflation, stagflation, hyperinflation, superinflation. What phase are we really in, according to Doug Casey, and what phase are we headed to?
Well, it's getting very late in the game. It's funny, when the economy nearly collapsed 10 years ago, I said, how can they keep the ball rolling? How can they kick the can further down the road? Well, I didn't anticipate that they would create as much money as they have to, in effect, throw oil on troubled waters. I didn't anticipate that they'd actually take interest rates down to zero, and in some cases below. But they've shot those arrows from their quiver. So what can they do next? That's what I'm asking myself. They're thinking about guaranteed annual income. They're already implementing what's known as modern monetary theory, which basically prints up money with no limits. They might try wage and price controls, as stupid and counterproductive as that is, because these people learn nothing. But what I'm expecting over the next 6 months or a year is increasing chaos in the economy. Why do I say that? Because in Washington, the people that are running Washington now are actually Bolsheviks. They're actually Jacobins. Now, they're not the same people as took over revolutionary France and revolutionary Russia, but they have the same philosophy. They have the same worldview, exactly. They have the same limited and incorrect view of economics. They're acting like these people. And at this point, we're actually on our way to a police state in the US and a lot of other countries around the world today. You combine this with the COVID hysteria, and you tack onto that the global climate hysteria. This is big trouble. These people are directing trillions of dollars towards what should be viewed as a relatively trivial annual flu, and trillions more dollars towards shutting down the carbon economy, which is actually insane. And it just compounds all the other mistakes that they've made. So big trouble this way comes.
Okay. Let's unpack that. A lot of good stuff there. A lot of questions I have now. If the taper will be delayed, then Doug, right? If they're just have to keep printing because they have no choice, then do you not foresee a correction happening in the S&P anytime soon?
Well, nobody knows how high a tree can grow. And frankly, I'm surprised that the market's gone as high as it has. I haven't participated in it because I've been doing my own thing. And it's been very fine, thank you very much. But look, the stock market is at an all-time high. It's in a bubble. The bond market is in a hyper bubble, and it's much bigger than the stock market. So I don't want any part of either one of them. What I'm doing right now, I have been doing, is buying resources, mining shares, oil and gas shares. That's where I am.
Yes, and that's what you've done for a long time. To that point, gold prices, Doug. We've heard it for the longest time. Gold is the ultimate hedge in inflationary times. And the number one question I get is, well, then how come gold, apart from the nice few pops we have here and there, isn't headed much higher? Is it because the S&P keeps roaring higher? Is that the greatest threat and competition to gold right now? Is it the S&P?
Let's look at this from a historical point of view. Back in 1971, gold was at $35 an ounce. Now it's at $18.50. So it's had a hell of a good run over the last, dare I say it, 50 years. At this point, it's not like gold is a super bargain, which it has been at times in the past. It's reasonably priced relative to other commodities, relative to the world at large. I'm mainly involved not in gold per se. I think it's going higher because it's the only financial asset that's not simultaneously somebody else's liability, which is very important in a time of financial chaos, which we are entering. I'm mainly speculating in gold mining shares, which in some ways are at all-time lows. Certainly relative to the stock market, they are. Certainly relative to the amount of earning they are. So that's where I am as far as gold is concerned. The shares, not the metal.
Okay, you prefer to be in the mining shares, not the physical metal.
They're speculation. They're not an investment, but I see a lot of upside in these gold shares.
Yeah.
I suspect that, the market has gone from one bubble to another, including cryptocurrencies and so forth. I think at some point the public is, as inflation goes higher, is going to focus on gold. Gold will go marginally higher, and gold stocks, which are just a teeny weeny rounding error of the market as a whole, a little bit of buying can take them double, triple, 10 to 1 when we talk about the explorers.
But just getting back to the spot price of gold, and I hear what you're saying. And obviously I love gold, I get it. I think the frustration that lies for many investors is they see the action in Bitcoin and they're thinking, well, wait a second. Okay, gold's done well. Yeah, we know the story. We know the narrative. But why isn't it 2,000, 3,000, 4,000, 5,000 an ounce?
Well, I don't know what the right price for gold is. I mean, we can come up with various parameters for what gold should be. So yeah, you can make arguments that when the monetary system is reset, gold is going to have to be much higher than it is. I'm just saying that relative to most things in the day-to-day world, meals you buy, suits you buy, cars you buy, it's more or less reasonably priced at the moment. It's going higher, but it's not a giveaway bargain the way it was in, let's say, 2001, when it was actually cheaper in real terms than it was in 1971.
Thank you for that. I want to get your thoughts on cash now. Because I've had various experts on, Rick Rule was on recently, and he said, look, at the days of dramatic reckoning, I actually want cash because he wants to be prepared to go in and be able to buy things that are cheap. On the other hand, I'm speaking to experts who are saying, no way, given the current scenario, I'm out of the banks, I'm out of cash. And if I was, let's say 25% cash, I've now gone into Bitcoin. Where do you fit in that?
Well, I've been involved in Bitcoin for about 4 years, and Bitcoin's been very, very good to me. And of course, there are about 13,000 other cryptocurrencies competing with Bitcoin. You add all their values together, they still only come to $3 trillion, which is a lot of money, but pretty soon, Biden's going to have to ask his science advisor what comes after trillion because of the amount of money being printed up. So yeah, look, all these things are interesting, but the problem with dollars, you've got two problems with dollars. Number one, you hold on to dollars, you're getting roughly 0% interest rates from banks anyway, and it's losing value in between 6 and 10% per year, going to 15 or 20% in my opinion. So that's not particularly good. On the other hand, if you keep your money with banks or brokerage firms, you're only insured up to a certain level. And you may find that these banks fail. And they're not bailed out by the government, they're bailed in by depositors, the way banks in Cyprus were a few years ago. So you're caught between a rock and a hard place. And when I say that I'm not super bullish on gold, bullish, very bullish, but it's not a superb speculation. I still own every gold coin that I bought, and I've been buying them for 50 years. I actually have a lot of them. Because remember, it's money in its most basic form. I'll give you a prediction. Sometime in this decade, the Chinese, in an effort to make the yuan the international currency to replace the dollar, they're going to make it redeemable at a fixed level with gold. Because just to throw out a little factet, the major export of the US today is not soybeans or Boeings or computers. Our major export is dollars. We ship the rest of the world dollars, and they ship us Sonys and Mercedes and cocaine. So there are a lot of changes that are going to be happening in the next few years on all levels. But I think eventually, unless the world is going to, unless the government, unless the US is going to continue descending towards third world status, as outrageous as that sounds, they're going to have to make the dollar something more than a floating abstraction. They're going to have to redeem it with a fixed amount of something,
right?
Probably gold.
Or if not gold, do you think that's what's behind the digital dollar that we're headed towards?
The digital dollar. This is another disaster that's in the making. There is a motion in the world on the part of all the central banks, not just the Americans, to eliminate cash currency, $100 bills, $50 bills, go away. When you buy or sell something, will all be done electronically on your cell phone. And this is a disaster because it means the government will know absolutely everything you're buying, everything you're selling, everything you own. It's not going to solve a problem. It's going to make the problem worse because you'll be totally under the control of the people that are in control of the digital dollar.
Mm-hmm. Right.
It's a disaster from an economic point of view, from a personal freedom point of view, every point of view. But it's on the way. They're going to institute it.
Wouldn't you hope that the public would push back on that, Doug, and say, wait a second, you can track everything I do, everywhere I'm going? I mean, do you think there'd be an uproar, or do you think that people become complacent and will just accept it and will just morph into that new reality?
Well, I'm afraid that's exactly what's going to happen. What people are interested in is their own personal lives, okay? As long as there's food on the table and something interesting to watch on their widescreen, they're fine. So yeah, I think the powers that be are going to get away with all kinds of things that inure to their benefit, but not to the benefit of the hoi polloi, capita censi, the common man. It's too bad. It runs counter to what has made Western civilization great. And of course, Western civilization itself is under attack and collapsing around us as we speak. Sorry to be so bearish sounding, but we're actually at a major turning point, I think, in history.
Well,
what's going on now is the biggest thing since the 1930s and similar.
Well, you were going to say you're not bringing all bad news. We started by saying, we don't necessarily have to use frozen gravy this time, or maybe pick my own berries for this Thanksgiving. So there is a silver lining for you, Doug.
Well, there's always a silver lining. I mean, look, let's suppose I'm right about the mining stocks, the golds, silver, uranium, and there's a number of others that I'm involved in. So let's suppose I make a lot of money. I still can't travel unless I get vaccinated, which I have no intention to do. Maybe I will a year or 2 years from now when I see how dangerous it really turns out to be. I don't know how I'll be penalized for saying that global warming is really hysteria and scientifically just nonsense. So having more money isn't this is a great time for a speculator if you're in the right place. Having more money, however, isn't the solution to everything. I don't know. It's a cosmic question, Daniela. And I know we're not here to talk about cosmic questions. We're here to talk about money. So as far as that's concerned, I'm telling you what I'm doing. And look, I'm diversified, not only monetarily, but internationally. Like right now, I'm speaking to you from the quiet, backward, but peaceful little country of Uruguay. So,
and will you be celebrating Thanksgiving there?
Will I be celebrating Thanksgiving? Probably not. No.
I knew that would be the answer. I knew that would be the answer.
Look,
Well, you know what, Doug?
one of the few holidays that I celebrate every year is Guy Fawkes Day, which transpired last week. But you know, Thanksgiving is probably another holiday that's going to be thrown out the window by the social justice warriors and the wokesters, because it's just evidence of the white men exploiting the Indians way back when. So,
well, if I could say it, I am thankful for you, Doug. Thankful that you are in my life. So thank you for that. And I appreciate your time always. You're always welcome.
Well, you know, and I really enjoy talking to you, Daniela. So can't wait to talk to you next. We'll see how the world evolves. I hope I'm wrong about most of what I've been saying, incidentally. Because
unfortunately, you're rarely wrong, though. You know, and just to that point, you know, how long have I been interviewing you, Doug? I don't know. Years. Okay, over 10 years. And I remember certain moments thinking like, wow, Doug's really out there thinking this, you know, especially when I had started my career. And I'm not as woke, perhaps, as I'm more woke now than I was then. And I'm thinking like, those are really far out theories or conceptions that Doug has. And, you know, when I look back to the tapes, when I do the research, I'm thinking, wow, Doug was right all along, every step of the way. But I hope you're wrong too this time.
Well, listen, I prefer good times, even if they're artificial, more than I like bad times, even if they're real. So let's hope I'm wrong.
There you go. Let's hope you're wrong. Doug Casey, thank you so much.
Thanks, Daniela.
And thank you for watching. We'll have much more for you, so be sure to stay tuned to stansberryinvestor.com. And don't forget to sign up at danielacambone.com for premier access to content and special offers you cannot get anywhere else. That's it for me. Thanks for watching.